Welcome back to Fast Money. We've got an earnings alert on Kraft Heinz sinking in the after-hour session. Let's get to Leslie Picker for the details. Hey, Les.
Hey, Melissa. Pretty disappointing quarter for Kraft Heinz, missing on both the top and bottom line compared with analysts' expectations. Blaming the profitability miss on some inflation costs, some commodity price pressures that they faced during the quarter. Also announcing that they received a subpoena from the Securities and Exchange Commission, the SEC, in October of 2018 related to some of their accounting practices. They say they've recorded a $25 million increase to the cost of products sold, COGS, as an out-of-period correction, as the company determined the amounts were actually immaterial in the fourth quarter. But nonetheless, they say they're implementing certain improvements to their internal controls to mitigate their procedures to prevent something like this from happening again. Interestingly, they said that some of the on the earnings side, some of the commodity-driven pricing action in the U.S. was due to increases in prices for dairy and coffee. On the bottom line, they reported 84 cents adjusted, which was about a 10-cent miss from what the street was expecting. Top line, $6.89 billion compared to $6.93 billion that the street was expecting. Melissa, you can see shares down about 11% in after-hours trading. Back over to you.
Yeah, they are sinking. Leslie, thank you. Leslie Picker back at headquarters. And this is going to mean pain for two very big shareholders of Kraft Heinz, and that would be Warren Buffett's Berkshire Hathaway as well as 3G, the private equity group. You're saying this is a disaster of a stock. It's
been a disaster since the beginning of 2017. It was a $95 stock. I think it was probably making an all-time high or so about that. People have said valuation now for the last year and a half, 2 years. Well, guess what? Valuation's not working, folks, and I still think there's further downside. You know, the CEO talks about iconic brands and all these great things. You can have iconic brands, but apparently nobody's buying those iconic brands. I mean, you know, the ketchup, I'm a big believer in it. Heinz 57, I'm all about it, but I must be the only one because they missed EPS by 10 cents and they continue to miss on the revenue line. I still think the stock has downside.
I feel like snark is going to come out of his mouth.
No, not snark, but this actually goes back into that conversation we were having. So today, Kraft Heinz closed at about a $60 billion market cap. Tomorrow, it's going to be down 10%. It's a company with $26 billion in sales and $3 billion in net income. It's two Xilinxes as far as market cap. Xilinx is going to have $3 billion in sales and $1 billion in net income. So what I'm talking about is here, for every one of those names that you want to highlight, there are just some disasters lurking.
So you'd rather
and
have a
bigger
very
disasters,
narrow group
and they have a
a
bigger impact on S&P earnings.
But
that's what
Dan, you know, this is the wisdom of price. This is a stock that was $96 2.5 years ago. It's $46 today. Those are not names you buy into earnings. You don't buy downtrends into earnings. So I don't think we should be terribly surprised with this response. Then you look at where it can go from here. I mean, there's nothing underneath 40 bucks.
If we want to do some math and figure out S&P earnings, and we figure out we're going to cut a bunch off of Kraft, right? And we're going to add just a little in Xilinx. But Kraft at $60 billion is going down 10%, and Xilinx at $30 billion is going up 20%. You just do the math. That's how you're getting a more expensive market, because the companies that don't have the earnings, right? I mean, it's just math. So you can talk all you want about these high flyers and some of these things. It just, I don't know.
No, to Dan's point quickly, I mean, General Mills has been no.
It's a very difficult space to be in.
I mean, it's been a train wreck as well.
Competition, generic competition,
that's a
Amazon
$30-something billion company. So I mean,
well, they've got pressures. They've got pressures. They don't have pricing power. And what do we talk about all the time? Those with pricing power win, and those without it. And obviously, Kraft Heinz is one of those. They are not in a position where they do have the pricing power, because when you look at Netflix, what did they do? They raised prices and it seemed to work, right? I mean, those that have that possibility
Procter
are
& Gamble
strong.
in this space has pricing power.
There are absolutely some in the
fine.
space, absolutely, but they do have inflation worries that a lot of
This is not a problem distinct to this stock. Look at Campbell's Soup over the last number of years. Look at Altria over the last number of years. There is a problem with a lot of these big consumer staple stocks. They haven't been leaders for years, and they've shown us nothing here over the last couple of weeks that would change that opinion for us.
Soup and cereal. No one's eating that stuff.
I tell you what, I had some Special K this morning.
With the berries?
No. You know why I don't get it with the berries? It's funny you say that. I know we got to go to commercial,
berries
but
are fake.
the flakes, no, they're real berries.
Flakes are sweetened in the berries.
But the flakes change in the berry product. They're different flakes.
Oh,
I'm
really?
dead serious. They have to coat them with something.
Speaking of flakes,
they sweeten them.
That's the more you know.